Hello everyone, come back to me, Mary Darmayanti. Welcome back to my YouTube channel. So today I will make a video about explaining what accounting is. Understanding accounting is a process of the recording, summarizing, classifying, processing, and presenting transaction that day, as well as various activities related to finance, with the extent of accounting. It will make it easier for someone to make decision and other goals. Talking about accounting is the definitely related to number and the complicated calculator as a form of the recording transaction. In general, accounting is needed in business as a financial reporting a company. Making accounting report can be as material for corporated decision making accounting to the result of the accounting any analysis. A deeper understanding of the accounting will be developed in this active, including the function and the field. Some accounting fields include financial accounting, audit for auditing check, management accounting, tax accounting, bagender accounting, accounting for non-profit organization, cost accounting, accounting system, social accounting. Accounting cycle, transaction identification. The first step in the accounting cycle is identifying transaction. Accountsman must identify transaction of that they can be properly recorded. Not all transactions can be recorded. Transactions that can be recorded are transactions that result in the change in the company's financial position and can be objectively assessed in monetary unit. In addition, the transaction to be resolved must so have evidence. If there is not evidence, the transaction cannot be resolved and reported in the financial statement. Proof of transaction are actually in the form of the received notice, in conflict, front of change out, memo of write-off, etc. The evidence must, of course, to valid and verified. Transaction analysis. After identifying transaction, accountant must determine their inclusion of the financial position. For simplicity, you can ask mathematical accountants asset libraries plus equity. The recording system is double entry system. That is, every transaction recorded will have an effect and the financial position, debit and the credit in the sum announced, so that each transaction effect and lead to accounting account. Recording transaction into the journal. After transaction information is the analysis, that is the recording and frequencies into the journal. A journal is a chronological record of the transaction that occurred in a accounting period. The process of the recording transaction into a journal is called a journalizing. There are two types of the journal: one, general journal, and the special journal. Public journals are known as journals. Actually, the recording of the transaction is the entry into one account debit and one account is the credit. Meanwhile, special journals are held to improve the recording efficiency of the recurring transaction. Example include sales journal, purchase journal, cost receipt journal, and the others. Ledger posting. The next step is to post transactions that have been recorded in the journal into the ledger. Ledger is a collection of the accounting account, each of which is asked to record information about certain asset. In the general, companies have lists of the ledger accounts called care of the accounts. Each account is actually given a code number. To make it easier to individually and make cross inferences by recording transactions in the journal. Preparation of the balance sheet. A trial balance is a list of the balances of the ledger accounts for a certain period. How to arrange of the trial balance is very easy, so only need to move the balance is the ledger to the trial balance to put in together. The balance is the trial balance must be the same amount. If the amount of the debit balance is not the same as the amount in the credit, it is said that the trial balance is not balanced. There is still an error. If so, then the accountant must look for errors the occur before the result is the preferred. Compilation journal adjustment. If the end of the accounting period, there are transactions that have not been resolved, or there are transactions that are strong or need to be adjusted. They are recorded in an adjustment journal. Adjustments are made periodically usually when the result will be complete. Adjustment recording is the same as recording general General transaction. Adjustment transactions are resulted in the adjustment journal of the then recorded into B ledger. After that, the balance in the ledger is ready to presented in the financial statement. In other words, the final result of the accounting process is a financial result report prepared on an accrual basis. Preparation of after adjected trial balance. At this stage, you only need to prepare a second trial balance by moving the adjected balance in the ledger to the new trial balance. The balance of the accounts in the ledger is grouped into group of assets or liabilities. The balance between groups of the assets and the liabilities in this trial balance must also be balanced. However, remember a balance is not necessarily true, but the right balance must too be balanced. Preparation of financial statement. Based on the information on the trial balance after adjustment, the next step is to prepare financial statement. Financial statements are ranged like account statement to scrape the company's performance, result of change in the capital to see change in capital that have occurred. Balance sheet can be asked to predict liquidity, solvency, and the flexibility. Cash flow statement providing reimbursement information generating cash out and cash in the recent period. Compilation of the closing journals. After making a financial report, the accountant must make a closing journal. The closing journal is only made at the end of the accounting period. The accounting that is closed is only a nominal account or profit loss account. The mean foot is to zero or credit for zero relate account. Nominal account must be closed because the account is asked to measure the activity or flow of the resulted that occur in the prepaid period. At the At the end of the accounting period, the nominal account have finished clearing out this function of so it must be closed. Furthermore, in the next period can be asked again to measure new starting activities. Preparation of after closing trial operational. In this step, the accountant composes the trial balance after closing. This balance sheet is a list of balance of ledger account after the closing journal is made. This trial balance only contain the balance of the permanent account. The purpose of the making a trial balance after closing is to gain confidence that the balance is the accurate, so that the preparation of this trial balance is not mandatory, only optional. Compilation of the inventing journal optional. The purpose of the reversing journal is to simplify the procedure of the recording certain transaction of the our repensability in the following period, because the purpose is to simplify this statistic is also optimal. Inventing journal are actually made a beginning of the next period. You do this creating a reversing journal from the original adjecting journal that was made. In other words, reversing the account that was made the accounting journal from interior debit to credit and from the initial credit to debit. General accounting adjectives. Number 1. Profit information about finance, both asset and the company liabilities. Profit information about change to various economic result of the company. Profit company financial information that can assist in the making estimate of the company's potential profit. Profit information about change to various economic scientists of the company, both asset, debit, and capital. Profit other information related to financial statement to help us of the result. Number 2. Specific accounting objectives. In particular, the purpose of accounting is to profit information is the form of the result that account financial position, result of the operation, and the other change in the financial position in the accountants with a generally accepted accounting privilege or generally accepted accounting principles. Qualitative accounting objective. The objective of accounting qualitatively include of the following: profit relevant information, deriving information that has been verified and validated. Information confident can be understood by interested parties, submitting financial statement for the benefit of the all parties resulted to company activities. Profit transaction information that is real-time or as soon as possible. information as made is in accordance with the generality, accounting, prescribed, and can be accompanied. Submission of the financial statement must to be complete of the meet financial statement disclosure standards. Accounting function. Number 1. Recording report. Recording report to recording transaction records systematically the chronologically is the main function of accounting. The record of the transaction record as descent to the account ledger until it financial preferred the financial account to find out of the profit and the loss of the business at the end of the accounting period. Number 2, profiting profitability of the asset. The next accounting function is to calculate the actual amount of the depreciation of the asset, assigning the right method and apply to a change asset. All unanticipated differences of the asset will result in a business going bankrupt. That is why accounting systems are designed to property and the business asset from announced as. Number 3. Accounted result. The next accounting function is to communicate the result and the transaction that are recorded to all parties involved in a particular business. For example, investor, creditor, employers, government, office, results and other againsts. Number 4. Ledger meeting. The accounting function is also related to system design and the development. For example, a system to assure records and the reporting of the result always meets legal requirements. This system is then needed to active ownership or authority to submit various statements such as tax return, tax return, and so on. Number 5. Classifity. Furthermore, the accounting function that is not less important is the classification related to the systematic analysis of the all recorded data. With the classification, it will facilitate the grouping of the types of the transaction or entries. Number 6. Make a summary. This summarizing actually influencing presenting accounts dimensional data with delivery that is understandable and the answer useful for internal and external and as of the accounting report. This activity lends to the preparation of the result, trial balance, income statement, balance sheet. Number 7. Analysis and interpreting. The last accounting function is to initiate and interpret financial data. Financial data is that have gone through the analysis process is then interpreted in a very way that is easy to understand so that it can assign in make an assessment of the financial accounting condition and profitability of the business operation. Benefits of the accounting in the business. Profit financial information as a basis for making managerial decisions. Profit information report of the external parties as a financial control and the controlling tool. As a company evaluation tool become the basis for allocating resources. Field of the finance accounting and business. Number 1. Financial accounting. Accounting field which influences according the company's financial transaction periodically as a source of information that is useful for management, company owners and the creditor. Generally, almost of all business apply financial accounting as a form of recording a company funds. Number 2, accounting or accounting examination. Fill in accounting that involves examining financial statement to find out the honesty and the truth of the result. In a developing business, it is actually not explained in the field. Accounting is very important to know completing the company in the company. Number 3, tax accounting. File of the accounting that influence tax reporting from a corporate finance. Tax accounting is important as under consideration regarding of the equalities to company transaction. Number 4, budget getter accounting. The name suggests this accounting is asked to make a company budget about a plan for us money in a change period. Number 5, cost accounting. Accounting is asked to control a company budget for all budget. The company is to surface the ask for a company fund every event term is has been budgeted. Non-profit organizing accounting. Not all business apply this accounting field because there's a goal in the to plan a budget, not to make a profit. For example, as in company CSR fund, this includes the soul of non-profit organization accounting. So, hopefully this video can help and can be one of the references. Thank you for watching and watching my other video. Bye.